Last Thursday, the U.S. stock market began heading toward a 6-day losing streak, then had the 5th largest same-day reversal in the S&P 500's history. All three major indexes, the S&P 500, Dow Jones Industrial Average, and Nasdaq Composite, ended with gains. But Friday's session started with losses across the board, leaving investors scratching their heads about what just happened. So in this video, we're going to tell you that why stocks are dead and crypto is the best investment ever. The video is going to be amazing, so make sure you stick to the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Dead stock, also known as dead inventory or obsolete inventory, refers to items that aren't expected to sell. Dead stock can negatively affect a business's bottom line. Don't confuse dead stock with dead stock, a niche term used by some consumers, such as sneaker enthusiasts. Dead stock usually refers to discontinued lines of unworn sneakers or vintage items like clothing and fabric that are no longer available on the market but still have their original tags. Unlike dead stock items often sell at a premium price. Dead stock is inventory that is unsellable. A business may find itself with dead stock because it ordered or manufactured too many items, and then found they didn't sell as anticipated. Dead stock can also include damaged items, incorrect deliveries, leftover seasonal products, or expired raw materials. Perishable items, like food or medicine, can quickly become dead stock because they usually must be discarded after a specific time. However, the definition of dead stock doesn't include merchandise returned by customers. September's Consumer Price Index (CPI) report, released last Thursday, showed a 0.4% increase in consumer prices compared to August. Core consumer prices, which strip out more volatile food and energy prices, went up 0.6% compared to August. But then a surprising rebound happened in the afternoon. It's hard to say for certain why stocks suddenly turned higher around midday, but Daley Anderson, co-owner and managing partner at Tenet Wealth Partners, offers a possible explanation. The S&P 500 had lost half of the gains from between the low during COVID-19 in 2020 to the January 2022 peak. That was a big technical point to hit, says Anderson. Many investors cashed in on profits from put options by buying stocks, which drove the market higher in the middle of the trading day. From there, the market was swept upward by its own forward momentum. Anderson also says the volatility we experience could be more noise caused by evolving sentiment and investors reacting to headlines. Notably, the latest inflation report and the first batch of company profit reports as earnings season begins in earnest. Getting inflation down will mean discomfort for the economy, and for investors who are concerned higher borrowing costs will cut into corporate profits and lead to lower stock prices. But the Fed is unlikely to change course based on one or two reports. Instead, they committed to ongoing interest rate increases to prevent inflation from getting baked into the economy permanently. Already, consumer spending is flat even without adjusting for inflation, and homebuyer demand is at a 22-year low as average rates for a 30-year mortgage now exceed 7%, the highest in 2 decades. This seemingly bad news shows the rate increases might be working. If the hot labor market begins to cool, that would be another welcome sign that inflation is getting under control. There's no doubt the Fed is closely monitoring all of these metrics. As year-end gets closer, experts recommend staying the course and dollar cost averaging towards your long-term investment goals, regardless of what the market is doing. The carnage was so intense that major cryptocurrencies, including behemoths like Bitcoin and Ethereum, lost up to half of their value from the peak, while other altcoins felt more pain. The tapering cues from the Federal Reserve, rising bond yields, crackdown signals, and regulatory strictness weighed on the sentiments of the crypto space. The tapering cues from the Federal Reserve, rising bond yields, crackdown signals, and regulatory strictness weighed on the sentiments of the crypto space. It appears that the world is coming to an end for the crypto community, and the crypto market is a dead rubber. After a brief recovery, the digital token market was back in red on Monday afternoon. A collective insanity has sprouted around Bitcoin over the last decade. It's hard to predict whether this cryptocurrency will become the global reserve currency or a store of value as widely accepted as gold. The thrill of riches or ruin leaves some investors wary, but others want to chase the chance for massive profits from investing in Bitcoin. Bitcoin is certainly a revolutionary technology, and it's likely much less risky in 2022 than it was in 2012. After becoming legal tender in El Salvador in 2021, other countries may look to copy this move to attract innovation, while others might ban it entirely in an attempt to save their fiat currency or clear the way for a central bank digital currency. Bitcoin has taken center stage in the global geopolitical climate, and 2022 looks like it may be the year of massive adoption. This has led investors to wonder if Bitcoin is a good investment. The main reason a traditional investor may want exposure to Bitcoin is to hedge against inflation and potentially the collapse of the fiat-based economy. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Stay safe, and we will be back soon with another video.